mainly so that if Morgan wants to hop on and watch us at the beginning to make sure
Amazing.
we're not looking crazy, she can help.
Yeah, we appreciate your help, Morgan.
Okay, so I need show notes. Okay. I was looking at the show notes today, and I was just like, man, it's only 3 days. The Sunday to Thursday gap, or Thursday to Sunday gap, like you've mentioned before, it's tight.
It's always the hardest for sure. That's why I was really thankful for the news we got today because, yeah, there's usually not a whole lot of difference.
Yeah.
I
I think what I was going to do had uh, Trump not done what he did with uh, the market is I was just going to do like a story time.
yeah. You know what Sundays also might be good for? Um, Kind of like a lesson session. Like you mentioned last
Yeah.
episode, like candlesticks, you know? Sundays
Yeah.
are a good spot, I think, for some of that material.
I agree. Okay. This is what Chad GPT just told me to.
I think we got a couple things we can add to the paper trading account. There's one thing I want to add to the account that I didn't put in the show notes, but once we get to that topic, we can just cover it.
What's that?
Mara,
Mara? Hmm.
you familiar
Is
with
that the
it?
ticker? No.
Yeah, that's the ticker. It's crypto related. It operates as a digital asset technology company that mines digital assets with a focus on the Bitcoin ecosystem in the US.
Hmm.
Company was formerly known as Marathon Digital Holdings, changed its name to Mara in August 24. Oh, and it's headquartered in Fort Lauderdale. I didn't know that.
Hey.
But yeah, it's crypto related, and we can cover the chart when we get there. But it's beat up, and obviously with the new news on crypto from Trump, could have a bullish March.
Okay.
So
Sounds good.
good, good, good. Um, I don't think
All
I
right.
put
So we'll do.
economic calendar and
Do.
earnings. I didn't put that on there, so maybe we can squeeze that in. But the week ahead kind of thing. Uh, did you watch Severance?
Yes.
So Jenny and I are starting it tonight, I think.
Ooh.
I've never seen it, but everyone talks about it, so
It is a really good show.
that's what I've heard. Miguel was
Yeah.
with us at the park telling me all about it. I saw something interesting on the options chain for the VIX. For the like March, I think it's March 18th contracts. There's like a ton of open interest there.
Mm-hmm.
And it's the week that the Fed drops their new rate decision. So I think that'll be interesting to cover. Somebody knows something.
We got a Michael Wilcox update, so he's gonna
Beautiful.
give us something.
Beautiful. I always love when he drops in.
Okay. Morgan said my audio is really low, so man. I don't know why it stays so low.
How's my audio?
That's good.
I haven't touched anything with it for like 2 weeks now, so I guess it's fine.
Hmm. I might have to put headphones on. Okay, let me go grab some. It's so hard to get out of my hole. I'm sure I moved them in order to keep them away from Amelia. But let's see. Turn A1 to max out in the master section. Oh, that's too. That's, I'm sorry.
Oh, you're fine.
I'm reading through a forum.
Tomorrow's what, the 3rd?
Yeah.
So we got tariffs going into effect on Tuesday.
Check, mic check.
Sounds great to me.
Does it sound any different?
Sounds a bit more crisp, maybe is the word.
Let's see if that changed it. Morgan, don't fall asleep. Hey, welcome to Stonkcast.
Sounds good.
Stonk, 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 stonk.
Stonk, stonk, stonk.
Yeah. Right. Sounds better in
Morgan Harris, everyone.
there. Live producer. Yeah. I'm going to keep looking. Thank you. That's okay. I don't want to keep. I can change it in post anyways. So we'll go. Dyer? Better. Okay. We'll do segment 1, market overview, where you'll lead. And we'll let you hit market bounce, March seasonality, VIX, and Tesla. And then I can go crypto bump, Michael Wilcox update, which isn't in there, and then paper trading update, and then opening and closing.
Cool.
Does that sound good?
Yeah, so what am I doing first? You said the market bounce?
Yeah. Market bounce or shorts covering.
Okay, so we're basically just going in order of the show notes, right?
Yeah,
Okay,
that's right.
that's fine. Feel free to interject so I'm not hogging up the
ask.
first half of the show.
Based on the show notes, what's the best way to organize tonight's talking points? Follow a logical market flow. All right. Chat's telling me what's happening
Nice
in
chat.
Chat GPT. And then I'll have it summarize what it's doing. It's mixing it up, it looks like. So
Mixing it up.
okay, can you easily copy pastable format for a quick reference? If you're watching live,
Welcome.
this is how we prepare the show. We use our friend ChatGPT.
Behind the scenes.
This is behind the scenes before the show. Did you get a podcast? Did you got a text message? What happened?
Oh, it was just a notification. You heard that?
Yeah, I heard the vibrate.
Meow.
Meh.
Good
Okay,
job,
I'm gonna send
Shock
this
Mount.
to you. Yeah, seriously.
Beautiful. Thank you, sir.
So I love how it puts fire emojis.
I thought you did that. That's all GPT, huh? That's really funny. Brandon leads, Ethan reacts.
Whoa!
Riverside's having trouble getting a signal from your camera. Check the cameras on and connected.
Huh. Yeah, I just noticed that your image is paused.
Let's see. Device struggling to recover. This may be due to high load on your device. Try closing all their apps and tabs or restart your computer if this should persist. Is it better now or no?
Yeah.
Okay. Cool. Well, hopefully that doesn't happen again.
Okay. I'm ready whenever you are.
Beautiful. Let's do it.
Okay. Get my yawn out.
A little yawn.
Get a little sip of some lemonade.
There you go.
Mark the clip. Oh.
A little Cabernet.
You can't just like toss that out there.
A little some.
That was so unexpected. Okay. Marking the clip one more time. 3, 2, 1. The market is bouncing, but is it real or are the shorts just taking profits before another leg down? March is historically a pivotal month. Will we see a seasonal rally or is more pain ahead? Plus, we're eyeing some massive VIX open interest for March 18th that could shake things up big time. And for the traders out there, Tesla is at a key level. Is it a buy or is this the perfect fade opportunity? We've got all that and more, including the latest crypto pump thanks to Trump. Let's get into it. And welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond handed degenerate hunting for that next 500% play or a steady handed investor aiming for long term gains, we've got you covered. We break down the biggest market moves, give our takes, and maybe, just maybe, help you make some money along the way. My name is Ethan, and I'm here with Brandon. Brandon, how's your Sunday evening?
Ethan, good evening. Good evening, ladies and gentlemen. It is a beautiful evening here in South Florida. It is March 2nd, 2025. We are officially in March. I'm doing good. I've had a good day. How about you?
Yeah, good day. Got some chores done. It's cold. You had nice weather. We had cold weather up here.
Yeah, can't relate. I would probably enjoy some of that cold weather in a couple more months down here, though. So, yeah, it's been good. It's been good. It's been warm here, and you know what hasn't been warm this past week? The markets. The markets have
Oh yeah.
not been warm at all. Actually, they've been quite cold if you're a bull. And we've had a very interesting few days since our last episode on Thursday. Before we dive into it, just a quick reminder, if you are on YouTube, hit that like button, hit that subscribe button. Helps out the show, gets us in front of more people. If you like what we're bringing, drop a comment. And as always, we are on any of your preferred podcast platforms, iTunes, Spotify, all the above. But yeah, as far as the markets are concerned, we have had a lot of selling pressure over the past week, Ethan, and really heading into a new month here in March. There's a lot on the table, lot of investors, a lot of traders trying to get an idea of where we're headed. And let's just kick it off tonight with our first topic here. Really about the overall markets. Friday was a very interesting day. So we had the PCE report, which we told you about on Thursday's episode, that came in, and it basically came in as expected. So there was no real surprise with the PCE report. So that's good. And the markets reacted at first. When the bell went off Friday morning, a bit of a hesitation, but then it was a rally throughout the day, and now we are kind of sitting in a situation where we had this rally on Friday. The S&P 500 was up 1.56%. The Dow was up 1.39%. The NASDAQ up 1.58, and even small caps, right? We talked about how small caps in a bear market, or the beginnings of a bear market, typically the first thing to go. Even the small caps had a nice little rally, just over 1%. And so now we're kind of in a situation heading into the week ahead where we're basically trying to figure out if this was just kind of like a dead cat bounce. Is the market going to continue to sell off? What's really going to happen here? If we take a look here at SPY, let's just go ahead and pull up what SPY looks like for the daily chart. You can see that we had this bounce on Friday, but technically we are still below the 50-day moving average, which is this white line here. So heading into tomorrow, where the bulls are going to be looking for continued momentum to the upside, based off of some news we got from President Trump, which Ethan will cover. But that's kind of where we're at right now. Now, some are speculating that this was just shorts covering on Friday, which that very well could be the case. If we take a look at NASDAQ, it also had a bounce as well. But again, even the NASDAQ is below the 50-day moving average and creeping up to that 200-day. We had a lot of volume. So, buyers definitely stepped in here. But again, was it buyers? Was it shorts covering? That remains to be seen. So, as far as the overnight session, because futures did open at 6 p.m. Eastern time, the S&P 500, futures, the ES mini as it's called. If we take a look at the 1 hour chart, this is basically Sunday. We opened up right around here. Where are we at? Here we go, Sunday. So we're still up here. But right now, basically, if you look at the futures for the Dow, the NASDAQ, the S&P, everything's kind of flat right now. So a lot of indecision on the part of futures traders, which is a good indication of where the market's going to open the following day. So we'll see what happens heading into this week. We do have a full trading week ahead. And we do have some economic data that will be coming out this week. If you want, Ethan, I can kind of jump into some of the economic data that we have. coming up, and how that'll kind of dictate how the week goes. Um, Basically, for the week ahead, really what we're all waiting on is going to be basically the rate decision from Jerome Powell. That'll be coming up more, middle of the week, or excuse me, middle of the month, I should say. But if we pull up the calendar for this week ahead and we take a look at, let's see, Monday, we do have PMI coming out at 10 a.m. That's going to be important to see what goes on there. PMI for February projections of 50.6, previous was 50.9. We have an FOMC speaker coming up on Tuesday. There's really not a lot of data coming out this week until we get to Thursday. Thursday is going to be initial jobless claims. And that's going to be kind of the big one. Unemployment on Friday. So I guess what I'm trying to say is there isn't a lot of, as far as predicting what the week's going to look like, right? I'm not really viewing any. I could see, I guess, a relief rally for the first couple days, but I think come Thursday, come Friday, we could see some more selling pressure. So we might see a relief in the short term. But then I think we're going to continue to the downtrend. I'm still bearish, I guess is what I'm trying to say on the market at large. What are your thoughts?
Well, that was going to be my question was, were you thinking it's more of a relief rally or a bull trap? And
Yes.
if you're not familiar and you're watching, a relief rally is simply a rally where there's actual steam, blowing off, versus a bull trap where it looks like there's positive sentiment trending up, but instead you're just trapping the bulls. So again, the bulls are those individuals who are trading that are thinking that prices are going to go up or whatnot, and so they think, oh, I got my call options, I'm loaded up, I'm ready to go, but then they get rugged and the bears come and tear them apart.
Yeah.
But I think from a broader conspiratorial perspective, um, the 4channer in me continues to think that what's going to happen is that Trump is going to be set up to have a failed economy, and many short positions that have to be covered, specifically with GameStop, because I'm part of the 1% that believes in just about all of the conspiracies around GameStop, specifically with short positions, and how market makers have very deep short positions and they can't get out from the short positions without having more licto segment. But anyways, point is, I think the bear market is going to continue to be a trend for, unfortunately, for the next couple of months.
Yeah. And the interesting thing, Ethan, I was just taking a look at the options for SPY from Friday. So Friday's volume. So keep in mind that I opened the show with saying that SPY was up 1.56%. It had a great day. But even so, the puts outweighed the calls that were purchased on Friday. We had, just
So
over
anticipating big drops versus
Yeah, we had 5 million calls that were purchased, but about 6.5 million puts. So the put to call ratio was 1.287. So more puts than calls. That's what you need to take away from that on a green day. On a green day. So I think that smart money is betting that we're going to continue on a downward trend, and Friday was just I mean, look, it was a bit of a relief. We had a nasty sell-off last week, and even in bear markets, um, you're gonna have some green days in a bear market, of course, and usually those green days tend to be violent. You'll go down, 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 and then you'll have a rip up, and then it'll continue to fade off. So I personally believe Friday was just a bit of a reprieve after a ton of selling pressure throughout the week last week to end February. But yeah, I'm with you. I'm still pretty bearish, unfortunately, on the market heading into the next few months. But with that being said, that kind of leads me into my next topic here is seasonality, right? So one of the beautiful things about data is, you can apply it to the stock market. And one of the ways that we can do that is by looking at seasonality. So, for example, you can look at certain sectors, certain industries, and kind of get an idea of when those industries are strong, when they're weak. So, for example, a pretty common one that most people would be able to understand is retail is typically strong in the latter part of the year. Why is that? Well, you have holidays, you have people buying things, people spending money. So typically, when you look at discretionary, the discretionary sector, the retail sector, it tends to be strong during that time of the year, right? So heading into a new month, we are in March now. If we take a look at the seasonality for the overall market, right? So taking a look at um, SPY, for example, right? How does SPY typically do in March? I like to reference a website called Equity Clock. Feel free to look it up. It's a great site, and they kind of lay out different seasonality there. But March, according to Equity Clock, is one of the strongest months of the year for stocks, with the S&P 500 index rising by an average of 1.1% and gaining in 66% of periods over the past 5 decades. So if we, take a look at the past 5 decades, it tends to be, strong again by an average of 1%. So, that's what history tells us. Now, obviously, that's not taking into account some of the more nuances of our current macro environment when it comes to tariffs, when it comes to inflation, what the Fed might do with the rate decision pending this month. So generally speaking, March is a bullish month. But again, Ethan, despite that, despite that positive news, I'm still bearish. So
Yeah. That a tangent on seasonality as I was listening to the Wall Street Wonder Boy, Martin Shkreli, and in his live stream, he was talking about when you're looking at the seasonality of a company and you're analyzing a specific company, that one of the traps that people get into when looking for entry points or exit points is they look at year over year, and he was advising looking at quarter over quarter. And so if we look at here, we'll pick the S&P. And their quarterly returns. But and we look at the quarter to date versus year to date. This chart isn't adjusting. Well, yeah. I was like, this chart's not adjusting, but that's because we're in the same quarter as the year to date. um, anyways, the point is that we can have a very like high bump year over year, but
Right.
if you're not looking quarter to quarter, you can get a little jaded, maybe not the right word, but you can get faked out, pumped out,
Yeah.
pump fake.
Yeah. For sure. And nobody likes to get faked out. Um, I just thought of this too. I forgot to share this, but I was looking at investing.com, and they were, talking about just the overall, market sentiment right now heading into this new week. Um, According to investing.com, US stock index futures were largely unchanged on Sunday evening, following sharp monthly declines on Wall Street as investor sentiment remained cautious amid soon to be imposed tariffs. Um, and in a recent interview on Fox News, US Commerce Secretary Howard Lutnick said that tariffs on imports from Mexico and Canada are scheduled to take effect on Tuesday, March 4th, 2025. While the initial plan proposed a 25% tariff, Lutnick indicated that President Donald Trump will determine the exact tariff levels on Tuesday.
Oh,
I thought that was interesting. So he's
yeah,
kind of alluding to, like, we said 25%, but the exact number will be determined on Tuesday. So the reason I bring that up, Ethan, is because, like I said, I think overall we're still bearish, but I
yeah,
could see how Tuesday, let's say that number comes in a little bit lower than anticipated. That could give a
right.
little bit of a relief bounce to the market, I guess is what I'm trying to say. In the short term, again, I still think towards the end of the week, we'll be selling off again. Um, but yeah, there's a lot of indecision right now. I'm trying to think of a time period, over the past year that's been like this. This is a very unique situation where there's just a lot of different pieces,
Well,
and
just
people
last
don't
week,
have answers. What?
just last week, there was another announcement that Trump was going to make, and it was on a Tuesday. It was because last week, because the market was closed on Monday, but um, I think the just constant announcements that are coming from Trump and sort of the Zelensky in the White House last week.
Yeah.
Uh, um, it like there's just so much that happens on a day to day and a weekly basis, more so than I feel like during Biden's presidency. I felt like love him or hate him, but it seemed like there was at least a little bit more of a consistent feeling of being let down.
At
But
least you knew what was coming, right?
yeah, at least you knew what to expect.
Yeah.
And I I I voted Trump. I'm not dogging him at all, but
Yeah, me
uh,
too.
the man has a way of creating these environments of uncertainty, which
Yes.
maybe it's intentional. Maybe he does it so that everybody's on their toes and they don't know when to pivot left when they should go right. I don't know.
It definitely makes things a bit more volatile on a day-to-day basis, right? Um, so as an active, not so much as a investor, but as an active trader, you definitely got to be on your toes, because news can drop in an instant and can cause market reactions. So, um, but listen, I think it's important when we're talking about the markets to not be making your trading decisions based off of um, guesses, or, oh, I think this is going to happen, or I think that's going to. No, I want to see confirmation of a trade idea before I put a trade on. I think that's very
Right.
important. There's a lot of different ways that you can see that confirmation, and we're going to cover some of that in this episode. But that kind of leads me into, my next piece here on the VIX. And part of the reason why I believe that we are going to continue to see some of this bearish momentum, this selling pressure in the market, is because of what I noticed on the VIX just this weekend when I was looking at it. So again, the VIX is a volatility index directly tied to SPY and 30-day contracts that are purchased there. Generally speaking, if VIX is below 20, the market's fine. If it's above 20, people are getting worried. And we saw VIX spike as high as 21. I think it even touched 22 this past week. We saw
Right.
VIX up 10% in a single day, which we talked about on Thursday. That is never a good sign for the market. And just to be clear, generally speaking, when VIX spikes, the market goes down. But really, all VIX is telling you is that there's volatility. You can have a high VIX and a green day, for example, but it's more common to see selling pressure when VIX goes up. And so, the reason I bring up the VIX is because you can actually look at the options chain for the VIX and kind of get a gauge on, what people are kind of thinking. So if we just open up the options chain here on Thinkorswim, let's take a look first of all at March 5th expiration. So this would be this week. These are contracts expiring on Wednesday, right? So if we take a look at Wednesday and just kind of point out some large open interest, meaning this is how many contracts are currently being held by traders. The biggest number we see here is 6,700 on the $28 strike for VIX on the call side. So this is people betting it's going to go up this week to 28, which would imply more selling pressure, more volatility. On the put side, however, open interest is right around 16. So that's kind of, the high points on the call and put side for this week. So what I want, the reason I'm saying this is because if we look at these numbers, let's compare them to a couple of these other weeks. If we look at March 12th expirations, not a whole lot going on here, right? You got 2,600 on the $20 strike. You got 1,800 here at 29. But Ethan, you can see here, there's not a lot going on. 29,
Yeah.
0, 40. There's not much happening. And then look at March 18th. Look at this open interest on the call side. I mean, we're talking at the 20 level, 372,000 open interest. If you look here at 30, we got 393,000 open interest. These are massive, massive numbers. Look at this. This is the 60. The 60, I guess you would call it the $60 strike, right? For VIX. Open interest of 355,000 contracts that are currently being held. That is a ton for such a far out strike. I mean, just to put that
hopefully that's
in,
a play on the Greek and not an assumption that it will go back up to the 60s.
say that again.
Hopefully that's like a play on like the Greeks. Like remember that we went over last week. I found something about how it could have been like a theta play.
Yeah.
Or a gamma play. I can't remember which one, but instead of an actual, assumption that the VIX will be back up into the 60s. That's crazy.
That's crazy, right? It's a massive open interest for such a far out contract. And if we look at the year chart for the VIX, the last time we even got up there was back in August when we had that massive dump and just spike in volatility, and VIX went up to 65. So we have a ton of open interest. And as you can tell, I just have some levels marked out here. 2150 is a level that I'm watching, and we're kind of right there. We we're above it, came back down, which is good. But again, that is a ton of open interest, and so it got me thinking: why is there so much open interest on March 18th. Well, if you come over to the economic calendar for that time period, I just marked this off for March 13th to March 18th here on Bloomberg economic calendar. This is really cool because it not only lays out what's coming up, but if you look over here, it kind of gives, I guess you would call that a bull icon. I'm not really sure what that is. But anyways, it's giving you a gauge of how volatile that specific piece of news is for the market. So with 3 icons lit up here, it's the most, volatile. So basically on Thursday, March 13th, we have PPI data coming out. That's going to be huge, right? We got consumer sentiment on Friday. And then if you look the following week, right, on Monday, March 17th, we have retail sales coming out. That's going to be massive for the market, Ethan, because if that number comes in weak, that's going to be bad for the dollar. And then on Tuesday, you got some more data here. But the big thing that, is not being shown on this particular calendar is the fact that the Fed rate decision comes out the following day on March 19th. So it's interesting to me that all this open interest is on contracts that expire a day before the Fed rate decision.
Yeah.
So does somebody know something that we don't know? I don't know. I just always assume there's somebody in the market with more money and more power, and they know what's going on. But that's a ton of open interest. What'd you say? Yeah, like Michael Wilcox, he always knows what's going on. But anyways, that's our VIX segment. Just wanted to highlight that very interesting open interest there, and that's a way that I like to use options chains. And it's a great way to kind of build trade ideas. If you see something going up, you want to buy calls on it. A good idea is to kind of look to see where the open interest is, because that usually means somebody knows something. If you see kind of relative to other contracts, an outsized portion there on the open interest, but somebody is betting big on volatility this month. So
yeah, and I wanted to circle back to PPI and why that's significant.
Yes.
PPI is I think it's producer price index, and essentially, if you are a company that is selling something, it's the price that you're going to capture in between manufacturing and selling a good. And so, if the PPI data shows that producers are not capturing as much profit, then you can probably guess or assume that that will reflect in consumer goods through maybe like price increases in order to allow producers to kind of capture back that profit. If they've got really good numbers, maybe nothing will change. Maybe they'll do the same thing anyways. But you see that in the lumber industry right now, where the lumber industry is still ridiculously high, where like a sheet of plywood that would have cost you like $13-15 a couple years ago is now costing anywhere from $30 to $50. Uh, but that's an example of how PPI data reflects itself in day-to-day items. Is that those day-to-day items could be higher just based on it.
Yeah, and just to add to that, Ethan, on the economic calendar on Bloomberg, they give an overview of each, piece there. And to your point, right, they talk about, if PPI is, low, some of the decline will be enjoyed as wider profit margins by the producer. Some will be passed on to the consumer in the form of lower prices, but because PPI impacts consumer prices, it is watched by central bankers as part of fulfilling their mandate of price stability. So to your point, it's a very, very important metric for the market, for bankers, and could really play an impact into that, Fed rate decision. So,
And during your segment, Bailey waved and said, "Hi, YouTube."
hello, Bailey. Um,
Hi.
what do we got next? Let's see.
Next, we've got the Tesla
Oh,
bounce.
Tesla. We all love some Tesla. Yeah, so Tesla, I mean, we talked about it on Thursday, right? It's been selling off. It had like 6 red days in a row. And it was due for a bounce. I think I kind of talked about some different ways that you could approach Tesla from a more active trader standpoint. I am still bearish on it personally. But as you can tell here from the chart, on Friday, we did get a bounce. And look at that, Ethan. Look at how it respected the 200-day moving average. Isn't that crazy? It
Bounced
wicked
right off of it.
bounced right off of it. It wicked below it, and then it popped right back up. So just more to the point that that 200-day moving average is very important, watched by a lot of people, and you can see that very clearly here on the chart. So, anyways, we did get a bounce off of that 200-day moving average. Technically speaking, Tesla is oversold right now. Um, do I think that means that, Tesla is just going to rally back to all-time highs now because it's oversold? Of course not. No. But it did get a short-term bounce on Friday, and really, like we already mentioned, the market as a whole got a relief bounce on Friday. So it makes sense that Tesla would follow suit. But as far as the week ahead, I think that we could potentially see. I'm expecting some more bullish action out of Tesla in the very, very short term. Let me be clear. I do think it's still going to go lower. I do think it's going to break below that 200-day moving average, but I wouldn't be surprised to see a bit of a continuation to the upside for, like, Monday, Tuesday, Wednesday, something like that. Um, what I'm personally looking at is I think it's going to come back up here to this 325 level. As you
Right.
can tell, this was the low point back on February 11th, where it did bounce. So I believe I could see it coming up to this level, bouncing off of that potentially, and then continuing lower. I'm also watching the 10-day moving average here, which is currently at 326. Basically, I could see it coming up to this level. Sellers step back in as they see a decent entry point, and then ride this thing lower, eventually breaking that 200-day moving average. That's kind of what I'm expecting out of Tesla. I'm going to be looking probably to play some calls on it tomorrow, depending upon what the open looks like. But again,
Right.
very, very short term. If I was looking at contracts that were, 2, 3 weeks out, I'm definitely looking at puts personally. That's just my belief, based again off of the overall market sentiment right now. And just the fact that things overall do look bearish. But again, as we said earlier, even in a bear market, when you get those relief bounces, they are volatile, they are violent. And so, I wouldn't be surprised to see a bit of a move up before we continue lower. And keep in mind that we got this level here at 270 as well. So right now, Tesla respecting basically that level in the 200-day moving average. And yeah, that's kind of what I'm looking at on Tesla. Any thoughts?
I think we kind of predicted that they would continue to bounce down because they're still oversold, right?
Um, yeah, right now it's oversold. Um, basically this chart down here at the bottom of the screen that you see, it's called the rate of change indicator. And basically, all it's telling you is when it's down here in the green area, it's oversold. When it's in the red, it's overbought, right? And the way this indicator works, which is really cool, is it'll kind of lay out these red arrows when it's overbought and green arrows when it's extremely oversold. And you can see that we actually populated a green arrow on Friday. So it is technically oversold, but I think you can use that in a trade plan for sure to the upside. It would make sense based off of that indicator if you're building a trade plan with that kind of oscillator, that kind of momentum indicator, right? But again, I think I just think it's a bull trap, Ethan.
Yeah. So kind of using just basic economics, supply and demand. That's essentially what, drives the market anyways, is supply and demand, right? So
Yeah.
if it's currently oversold, that means that there is more supply than there is demand. And excuse you. And
Excuse me.
so the and I'm just breaking it down for atomic levels, right?
Yeah, please.
So you have more supply. If you have more supply, you need more people to purchase. So you need more buyers. So in the short term, like you're saying, you could have a small, relief rally in the micro form for Tesla, mimicking the market in general. Or, like we said, it could possibly also be a bear trap. But either way, there's more supply out there. And so the goal would be for that extra supply to be bought up. So at least based on that one indicator, right?
Right. It's
Based on that indicator itself.
right. So I like to use the rate of change indicator, RSI, relative strength index, right? Those are great indicators to use on a daily chart on higher time frames to see areas where, hey, maybe the selling pressure happened a bit too fast, and we're now in a spot where we are oversold, and it would make sense that people would step in and buy it up, and then vice versa. Hey, maybe the bulls are a bit too aggressive. We are way overbought, and we're due for a bit of a pullback. It's a great tool to use on higher time frames like the monthly, weekly, and daily charts, to get an idea of where we could potentially see a directional change, right? I just pulled up the options chain for Tesla. Obviously, it's one of the more liquid stocks when it comes to the options chain. And I don't really care so much about this week. What I'm more interested in is maybe like a couple weeks out. I'm just looking to see if anything jumps out as far as like open interest. I mean, it's kind of all over. I guess, you got 18,000 open interest at 350 on the call side. On the put side, the only thing I'm noticing is 250. So I mean, it's kind of spread all over. I mean, if you just look at Friday, of course, we had more calls than puts. That makes sense. 2 million calls were purchased, 1.7 puts. People were pretty bullish on Friday. So that's kind of where I'm at on Tesla. Again, I'm not a perma bear, right? I don't think the market is just always going to go down. But I just feel like I've seen enough over the past couple weeks to have enough reason to justify thinking that we're going to continue down. So, but yeah, like I said, I'll be looking for calls tomorrow on the short term. A couple of weeks out, though, I think we head lower. I really think that we can break this 270 If we get a negative rate decision from Daddy Powell in the middle of the month, that could be more, selling pressure for Tesla. Indeed. Again, being a high beta stock, right? So whatever the market does, it's going to exacerbate that. Yeah. So, so that's where I'm at on Tesla.
Cool. Well, let's jump into the crypto, not crimp, but the crypto pump.
Not to be
from Trump.
confused.
Yeah. So if you're plugged in at all to the internet, you've probably seen this already, but let me show you. Let me show you the results of a Truth Social post from our
crypto markets getting hot.
Yeah. The crypto market, Bitcoin, bouncing up almost 10 grand.
Wow.
It may have actually touched 10 grand, 85. We'll call it 10. It might be short of a couple $100, but it's still up there like 8 grand, 7 to 8 grand more than it was just a few hours ago, just 11 hours ago.
It's a massive spike.
Yeah, massive spike. Everything else followed. Solana, XRP, Dogecoin, even. I mean, everything followed it. And all of it was because our commander in chief. Let me show you something else. Let's go to straight to the horse's mouth.
Straight to the horse's mouth.
Donald J. Trump said U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order, this was signed on the 24th, actually, but the executive order on digital assets directed by Presidential Working Group to move forward on a crypto strategic reserve that includes XRP, Solana, and ADA will make sure the U.S. is the crypto capital of the world. So it's no longer, there's some South American country that was trying to be the crypto capital of the world, but we are making America great again. So it's interesting that this was signed on the 24th, and then just a random Truth Social post 11 hours ago is what the market is really reacting to.
That is interesting.
Yeah. And it makes me curious because it goes, we go back to the quote that I said last week on the last episode from the book that I'm reading. And there's the territory and there's the map. The map showed you the digital asset. What's he call it again? The digital assets, executive order on digital assets, directed by the Presidential Working Group. We were walking through that territory on the 24th, and today is when it bumps up after a random Truth Social. I don't know if you call it a tweet or whatever, but and it's not even the only thing he tweeted today. I'll call it a tweet, even though it's on Truth Social. But like he's got like 6, 7, 8, 9, 10. He's got like 9 or 10 other like tweets after that today. So it's very, very interesting how that bumps up. And so I always think, okay, so Bitcoin market makers. I always go back to the market makers. And I thought, okay, what's the connection with Bitcoin and market makers? Is it liquidity? Is it possible that they need liquidity and therefore a pump is needed for them to keep the stock market rocking and rolling, right? So we think about this, market makers provide liquidity by facilitating trades in both crypto and traditional markets. So when liquidity tightens, whether that's due to macroeconomic pressures, tightening monetary policy, or geopolitical risks, market makers they might need additional sources of liquidity to maintain their operations. So crypto is a high beta liquidity proxy. They often behave as high beta assets, which means that they respond pretty aggressively to liquidity inflows and outflows. So you were mentioning that Tesla is the same thing, right?
Hmm.
It's a high beta stock, I guess. Is that the right way to say that?
Yeah.
Um, and so it's just very volatile,
Right.
reacts very aggressively. And so crypto rally uh, could have been used to induce leverage and cash injections by having traders leverage up on borrowed funds, particularly through derivatives. This leverage could have created artificial liquidity, which then can be extracted through cascading liquidations. You love that. And so
Mm.
then the influx of retail and institutional capital during a pump could provide liquidity for market makers elsewhere. Um, so that's my go-to conspiracy theory is that crypto is often used to be pumped up to be able to provide a liquidity release valve. So some events that support the idea: Bitcoin had a recent pump despite no fundamental change. That recent pump, of course, being today. And of course, you could cut all back to just the Truth Social tweet. But again, I just think, okay, well, this is old news at this point. January 24th, that was an eternity ago.
Yeah.
Um, but it probably honestly got swept under the rug by everything else that's happened, and people just forgot about it.
Yeah, it's interesting how powerful a tweet is
Yeah,
from, President Trump, similar to Elon in a sense, right? Or Roaring Kitty, right? There's a few notable individuals when they put out something can have impact on the market. Obviously, right now Trump being probably the most impactful, naturally being the president. So it's interesting to me that part of me wishes that this didn't come out because it kind of like in my head I'm already thinking bearish
right.
for the week ahead. And so the crypto pump kind of clouds that a little bit. Um, but what's interesting looking at the futures markets right now overnight, um, you would assume because we've talked about this before that crypto is kind of tied right now to the market. Usually they're both up or down. But what I find interesting is that while Bitcoin is up, 10%, um, the overall indices, the futures indices for the S&P, the Dow, the Nasdaq, the Russell, um, they're not up that much now. They opened the night at 6 p.m. up like, you know, 0.30%. But right now, all the indices, with the exception of the Russell, I guess, which is up almost 0.5%, but the Nasdaq, the Dow, and the S&P are all flat right now. Actually, the Dow's negative. It just turned negative. So you have
Yeah.
this like discrepancy between where the futures markets are and kind of where crypto is. And so to me that's a flag that makes me want to stay in that kind of bear camp. What are your, I guess, thoughts on that? Do you agree with that, disagree? Do you think this crypto pump is going to continue to ride, or do you think it gets dragged down by the overall macro sentiment that we've been seeing lately?
Yeah. I am bearish as well, and agree that I think that it's pumping tonight, but I could honestly see it. I don't know. I mean, a $10,000 dip is just as aggressive as a $10,000 rise.
Yep.
And so I feel like it'd be hard for it to dip $10,000, but I could see it bleeding off probably throughout the rest of the week
That's
and
kind of
maybe
where I'm
2 weeks.
at.
Yeah. Yeah.
Yeah, it seems I haven't looked at any of the technicals on, Bitcoin or Ethereum or XRP, whatever, but I would imagine at this point they're creeping up to overbought territory just because of how quickly they went up, you know? Um,
Right.
so I could see a scenario where they kind of bleed off as well. Um, again, especially if we get more economic data that isn't the greatest. We get the tariff news on Tuesday, right? As those get put into place. So, um, I could see that kind of dragging it down. But for those who were in before that pump, you know,
You
you're
better
sitting
not.
pretty right now.
Yeah.
Set your stop losses if you're on the short term there, but
Yeah.
lock in some profits maybe.
And that we do have a question on the stream. And the question is there any difference to being someone who buys lows, sells high, versus someone who likes to hold out till X amount of money, which is better in the long term? And I think they're both neutral. They're both neutral approaches. Um, Actively buying when the price dips and then selling when it rises, like that's a valid trading strategy. There's nothing wrong with that. The only like drawback to it is that you have to be good with market timing, which I mean, you're only really going to get that through either luck or through experience with a particular like sector or company or whatnot. Um,
So they're
and then
asking if it's better to, like, on the short term, buy low, sell high, or just hold things for the long term. Is that the question?
yeah, yeah,
Yeah, it like you said, like it really comes down to a matter of preference. What's your personality type? I'm not
mm,
somebody who likes to hold things for the long term. I like instant gratification. Therefore, my trading style is very much short term because it fits my personality. So you really
yeah,
have to kind of look in the mirror, I guess, so to speak, and kind of think what matches with my personality, what kind of trading or investing style suits me. Some people are very risk adverse. Some people want to
mhm,
park money in bonds, and some people want to trade 0 day to expiration options. But you got to figure out what works for you, I guess. Um, I think if you're doing the short term, like Ethan said, you got to have a good understanding of what you're trading, that sector or that instrument, whatever it is. And I think the short term also requires more of an understanding of technical analysis to make those decisions, right? To when to buy and sell. So
yeah. And then holding until a certain amount. I think the first thing is that the amount of money shouldn't be the moon. It shouldn't literally be the moon. I know we all want to like hit a 10 bagger or a
I've
25
made
or a
that
100
mistake.
bagger. Yeah. But like if you want to like hold until a certain amount, you need to have that amount like written down. You don't have to have one amount. If
Right.
it depends on what your position is. Like if you have 10 shares of company X, you can have a stop loss at, descending percentages, so that you capture uh, a good amount of profit on each one or
Hmm.
each, target price. And then you just have to not play the game of, well, let me whip my calculator out and see how much I could have gotten if I had sold all 10 of them at the highest price. But
Right.
yeah,
No, I agree. Yeah, I've definitely made the mistake of I'm just gonna hold all this and let it moon. And
yeah,
even when it does moon, greed takes over, human emotion takes over, and you end up in a scenario where you end up not selling because you think it went this high, it can go even higher. Like I'm on
right,
the right side of the trade, momentum's there versus having predetermined exit points where you lock in profits. That way you don't end up in a situation where you're basically just trying to moon it. That's not a trading strategy. I mean, that's why we always end our episodes with our slogan, right? Plan the trade, trade the plan. You want to know what your exit is before you get into the trade. That way you can combat the inevitable human emotions that happen in trading, which cause so many people to burn out in this environment. So
Yeah. Yep. Which that reminds me, and sorry, the paper trading account is what
oh
I'm trying
yes,
to transition.
yeah.
Uh, well, before we get there, I think I hear something. I hear something coming around the. Oh my gosh!
Oh, he's back,
Oh,
baby.
he's back. Oh, Michael, he's giving me a fax right this second. Oh my
He's
goodness!
puffing on a cigarette, slurping a big gulp, faxing away.
He probably stole that big gulp too. So that's old Michael.
He definitely did.
He told me that there was going to be something cool coming, and he was very excited for this. And he's been sending me many faxes. He thinks that he's got something going on here, but he's got a Stonkcast field report. This is Michael Wilcox, senior agent in the field, Twin Cities. The Federal Reserve's high command has kept its cards close this past week, deploying a covert blackout strategy ahead of the next FOMC meeting. Despite Powell's silence, the market's seismic tremors betray the war behind the scenes. So, what's going on? We've got Jerome Powell. He's the architect, the grand master, the silent king. Every pause, every phrase is a construct meant to deceive. We've got Neil Kashkari. He's the mouthpiece, the Fed's attack dog. We've got Lyle Brainerd or Bernard, the whisperer, the one who nudges market expectations without ever leaving fingerprints. And Raphael Bostock, the shadow. He speaks in riddles. When he contradicts Powell, that's a tell. That's a secret message. Michael's surveillance notes for the past week. There were no press conferences from Powell, no leaks from his camp. A trap is being set. His strategy is reminiscent of 2018's Powell pivot, where the market was led into believing one thing before he yanked the rug. The inflation is dead narrative. Market chatter has turned hyper dovish, but Powell knows something they don't. What's his key tell? He has not directly committed to any rate cuts. The phrase to watch out for: appropriate policy adjustments. If he doesn't say it, the cuts ain't coming. Bonds are screaming. The 2-year yield dropped below 4.3%, which means that bond traders are betting Powell caves. But the architect doesn't cave, he recalibrates. Wow.
Wow.
Michael is so. So, what is the market impact analysis? Equities are drunk on hopium. The S&P 500 has rallied on the expectation of 3 cuts this year. This is a trap. If Powell resists the cut narrative, expect a hard reset. I think maybe Michael's got some old data for that, as far as the S&P rallying.
Could be.
And then we've got Bitcoin front running. That's true. The smart money is moving into hard assets. So anticipate a Fed betrayal. Despite the fact that Bitcoin is front running, gold is flashing warning signals. So what's your operative actions? Load up on volatility hedges. The VIX, this won't last. The architect silence equals incoming chaos. Watch the March CPI print like a hawk. If inflation ticks up even slightly, the dream of 3 rate cuts will die. And then short high beta names. If Powell doesn't cut, risky assets will get obliterated and the tech bubble won't survive. monitor his body language at the next press conference. We should do like a live recording of watching the press conference. That'd be so.
We 100% should do that.
Yeah. The market listens to his words. We listen to his hands, his pauses, and his micro expressions and his hands. So, what is the warnings and forecasts? The market is misreading Powell. Everyone is pricing in cuts, but Powell plays the long game. If inflation doesn't hit his 2% utopia, he will let everything burn before pivoting. And then a shock move is on the table. If Powell wants to reset expectations, he might drop a rate hike into the mix. Unlikely, but if it happens, meltdown.
Yeah.
March will be the battleground, so expect some volatility bombs leading into the next FOMC. The architect is watching. Stay sharp. In transmission, this is what Michael said. He wants to start calling this the Stonkcast Intelligence Division.
Love it.
All right. We'll get her going.
We'll get her
We'll
going.
get her going.
Oh, thank you, Michael, as always.
Yeah.
Hope you're staying warm.
But that was Michael Wilcox. Let's start to look here at our paper trade update for the weekend. You'll notice something. I still have all of my NVIDIA options. I haven't sold any contracts. I consulted with ChatGPT, and ChatGPT gave me some insight. And if it stays below 119 and then heads towards 116.40 or lower, then that should be my opportunity to continue to hold. And if it bounces from there, to trim my position to secure some profits. So we saw, let's see, make this chart a little bigger. We saw that it did drop. This is the 1 year. I don't want that. Let's do the past week. We had a nice drop on the 27th. It was a nice drop because I've got puts on the table and Fibonacci retracements. I have no clue what it means. I just threw it up on there because I thought it was interesting.
Nice.
But we dropped. We stayed in some good low territory for my puts, and we bounced off of 116.40 or 116.69. It looks like, and I need to get below 116.40. So I think if we continue to kind of trade sideways, I'll probably trim throughout the week. Because I don't want to hold on to these more than 7 days. And I think we're at, let's scroll up. I think it said 21 days, 19 days. So
yeah, that's a good plan.
Yeah,
I think it's going to roll over. So I think it's good. Obviously Celsius, we're still rolling with that. As far as still showing that open P&L being green, I mean, thank you, Thinkorswim. I mean, it's inaccurate, but I'll take it, I guess. Yeah, still rolling with that. We got plenty of time on that, but I think we need to add the VIX to the port.
let's get it in there.
Yeah, let's just do the I love the open interest that we looked at earlier on the 18 expiration
Of March.
Yep.
And that was on what price point?
I mean, there was some notable numbers there. I want to grab those 30s with the open interest of, was that 393,000? Yeah. I want to join that party.
All right.
Yeah, I think it's you got that Fed rate decision pending. I think it's a good spot to hop in.
Cool. So we're at all right. This is a silly question, but we are
We're
buying
buying.
call.
Yeah. We're
Uh,
buying calls on the VIX because we believe VIX is going to go up because the market's going down.
and we could only sell it if we had that position already in the account, right?
No, not necessarily. We could sell premium is what we would be doing in that scenario if we believed that VIX was going to go down and these contracts would never come close to being in the money, for example, then we could sell calls on the VIX. Like basically we could do the inverse, right? Like we could sell puts and collect premium, and then if it doesn't hit, then we just keep that premium, right? But excuse me, but I think buying calls is the way to go here based off of that open interest.
And do you want? Let's see.
Let's just do like a $4,000 position. So
Let's review that. So a $4,000 position would be about 90. Let's say 80.
yeah, that's good.
All right.
What was
So
that?
we'll
80?
do 80 contracts
Yep.
at $30. 15 days till expiration for a total of $4,140.80,
Beautiful.
leaving us with 173 in the account. Send it. Oh, limit or market? Any diff? Do you care?
Market. Yeah. No, that's good. We'll just buy them at the open.
Okay. Oh,
Mike.
shoot. I was on my live account.
And we might actually get a good fill on those if we get a little bit of green action in the morning because it'll make them cheaper. So
Cool.
I like it.
Well, there you go. That was a live trade in the paper trading account.
Boom.
And let's go over everything else here. I think we wanted to add VIX because we again think that there's going to be some volatility in the market coming up. So it's going to continue to be volatile.
Yep.
It's going to continue to be bearish, despite the fact that at least in the crypto market, we had a nice bump today.
Yep.
So
Think
that's
it's
where we're at.
misleading.
Yeah. And any big takeaways from today?
I would just say heading into the week ahead, again, we don't have a ton of news coming out. Any economic news coming out beginning of the week, at least not until Thursday, Friday. I wouldn't be surprised if we chop around for the first couple days. So, if you're looking at some short-term trades, just be aware of the overall bigger picture, the bigger time frame, which is down. For myself, I'm going to be looking to see some of these relief, bounces, for example, and then, looking for an entry point to the downside. So overall, I just stay vigilant. Not a lot of news till Thursday. Really, next week and the week after that, those are going to be the key points. So, but it's a new month. We're almost done with Q1 for 2025. We got the tariffs dropping on Tuesday. I could see that creating some volatility there. We got the trade war in full fledged. So that's kind of it for me. That's where my head's at for this week, is kind of neutral to bearish, I guess you could put it.
Yeah. Hesitant. Well,
Hesitant.
cool. Yeah. Thank you so much. I think that'll be a wrap for today. So, thank you for watching. If you enjoyed the breakdown of going through our paper trading account, make sure to check that out, or drop a comment below to say that you'd like more of that or you'd like more of something else. Make sure to like, subscribe, and just tell us what your market moves will be this week. What your crypto moves going to be? Are you going to stay in Bitcoin? Are you going to take some profit? What are you going to do? If you're on YouTube, Twitch, whatever platform you're on, leave us likes, comments, subscriptions, and keep our community growing. We've got a Discord community that we'll post soon, so that you can join, and we can all chit chat and start to develop some nice parasocial relationships where nobody knows each other really. But let us know what's going on. Do you think this market rally is real or just another trap? And as always,
oh, sorry. Yes, but before we do that, just want to throw in real quick. Ethan and I are working on a little something for you guys, and may have some special guests coming on here in a couple weeks. So more on that coming.
Yes, that's right. So remember, everybody, plan the trade and trade the plan. Okay. Thank you, Balsamic Bunny. Everybody who's still here, you're at the after show.
Welcome.
Welcome to the after show. This is where we really get down to business.
Did we just time that drink?
We take a sip, and now you get to watch what I like to call this is the Stompcast. Let's do a little. I'm going to be a part of making the thumbnail this week. I've been a fan of the black thumbnail with a Mimi picture.
It's great.
We talked about crypto, Bitcoin. Who is Satoshi Nakamoto? Yeah, the timing of us both drinking at the same time.
That was great.
Okay. March. Okay, we'll save the kind of March stuff for the March 16th. I don't know. I'm not gonna throw that in there. Pot of gold. Where's my Bitcoin? Okay, add a text box here. And the things we talked about were Bitcoin. We talked about our paper trading. I mean, we talked for an hour and a half, and it's like sometimes when I think about, we talked about, it's just not there. Tesla. So let's see. Working on it. I shouldn't. I should share something else. I should share my entire screen. That would be better. That way you see everything that I'm doing. Okay, save
That's
that.
great.
Beautiful.
Oh, that is beautiful.
Oh man. Okay. We'll do the pot of gold on a different day. Closer to St. Patrick's Day.
Yeah.
And um let's look up your old paper trading meme. That's good stuff. That's good stuff. None of these are scratching the itch here. Gold.
There's a lot of good ones there.
Yeah. I think that's the one.
Yes, that is the one.
I just love that oversight. Yeah.
It's so good.
Okay. And Reeves has nothing to do with it, but I want Keanu Reeves on a bench, but Trump instead. As a stretch. Let's see. That's not quite the sentiment analysis that I'm looking for. Samurai Ferrari. Hello.
Hello, hello.
Samurai Ferrari, if you're just joining, you're in the after show now where we are creating the thumbnail. Oh, I know it. Okay. Shoot, what is that? Willem Dafoe looking up.
Yes.
Okay.
Immediately, yes.
It's all these web P's convert.
In case people didn't know, Ethan has more fun with this portion of the show than any other.
That's right. Having a podcast, making the thumbnail. That's it. Upload. Convert. Save. Remove background. This is the flow. Find a Mimi picture, convert it, remove the background, upload it to Canva. Oh, I wonder if I could have just left it alone. Or is that green going to show up? Or is the green? Yeah. Did I not download it? I thought I did. My name is Willem Dafoe.
Beautiful.
And we're going to change the opacity. He's just going to be in the background.
He's just he's just barely there.
I'm going to send you forward. Okay. Get rid of that. Get rid of that. Get rid of that.
That's perfect. That's great.
36, 36, 32. And of course, Comic Sans.
Perfect.
There it is.
I think this is your best one yet. It just gets better each time.
More. It needs more.
It needs more.
Oh, it even shows that. That's probably trippy. Okay. Downloaded that. This equity clock, the like just free analysis that they throw in here is
It's
crazy.
so good. Although I couldn't figure out how to find the free portion this go around, like when I was looking at it tonight. I was having some hard time navigating it, but I know they have a lot of free stuff. Yeah. It's very cool.
Here's another here's something else for you folks.
Boom.
Don't start a podcast, start a YouTube channel.
Yeah.
We got to go back. Get the podcast cover art. Change. Let's see. What should this episode title be? Get my meme juices going. That's good. Episode 12, everybody. Episode 12.
Episode 12.
Let's see here.
Oh shit! I think I got to bounce.
Yeah, I think I can't start uploading until I stop the live recording. So thank you everybody for joining us. I see we've got lots of people on YouTube and probably just my sister on Twitch. But thank you everybody for joining. Leave a comment on all of the shorts.
Please.
And the actual video itself, the actual YouTube video itself, to get some engagement going.
Yes.
And thank you, everyone, and have a wonderful night.
Have a good night.
Stopped. And